Okay, well, thank you very, very much. Very happy to see everyone online. My name is Célestin Monga. I teach public policy and macroeconomics here at Harvard at the Kennedy School. I'm very glad to reconnect with some of my old friends and former colleagues who are on this panel. I want to thank Dominique and Mensbrugghe for putting this together and inviting me to join and to enrich my knowledge. The topic of this session is of great importance, obviously. It's really about trade and investment in Africa. And everybody says, I believe rightly, that Africa is the deal of the century. So you want to become a billionaire, you should go trade and invest in Africa. But why is this not happening? Now, we've been very lucky because just yesterday, UNCTAD, which is one of my favorite United Nations agencies. I prefer UNIDO personally, obviously, because I was managing director at UNIDO at some point, but I think that UNCTAD does a wonderful job. But just yesterday, they published their annual report with very interesting data on foreign direct investment around the world. And there is, on the case of Africa, in the sections on regional trends, there's some interesting information in there. Well, first, global FDI have rebounded to pre-pandemic levels around the world, which is fantastic news in these gloomy times. Now, second, talking specifically about Africa, well, the amount has reached record heights to $83 billion. Now, this is like the double of the level of 2020. Of course, 2020 was the pandemic, but still, it's a record high. Now, if you dig deeper, then you pause a little bit because 45% of that amount represents just one financial transaction in South Africa. So, well, it's still good, but it tells you about the fragility of the numbers. And if you look at the proportion of how much FDI to Africa, continental Africa, we're not talking just sub-Saharan Africa here, but continental Africa, well, the total amount of FDI to continental Africa for 2021 was, according to UNCTAD, about 5% only of global FDI. So this makes us pause, because if Africa is indeed the deal of the century, what's going on? Why are capitalists and everybody else not rushing there to make money? So we have two fantastic presenters for this session. I happen to be fortunate to know both of them quite well. Sebastian Dussu is a brilliant French economist who, despite working at the World Bank, has published a lot of non-orthodox, high-quality papers, including on the empirics of football, talking about football, what Americans call soccer, but the rest of the world call it football. So people don't know this about Sébastien, but he has interest in many, many fields. But he's currently, of course, managing economics for the International Financial Corporation, after having done many things at the World Bank, both as a researcher. I used to work with him in the research department of the World Bank. And then he went in operations, not just in operations in Washington, but going actually to the field and spending time on the ground in different places. So he's one of these strange, well-balanced economists that come with in very rare opportunities. I'll introduce Stephen when he speaks. So let me stop here and let Sebastian take it from here and tell us about investing in Africa, what's going on, and what we should know about the new development. Sebastian?
Okay, well, thank you very much, Célestin, for the kind words. Very, very pleased to reconnect and to see you all. Very happy, very honored to be there. I'm going to talk indeed about investing in Africa. And when I'm going to talk about investing in Africa, I'm going to talk about investing financial resources better financial resources, more financial resources in Africa, more impactful finance in Africa, but also investing in research efforts in Africa, on a continent that deserves utmost attention, given that it increasingly concentrates global poverty. And also to rebound on your words from a previous paper I've read recently from you, Célestin, that if insufficient progress is being made in terms of poverty reduction and inequality in Africa, this could turn Africa from being a common public good to a common public bad, with severe consequences for the world in terms of the climate, security, and migration. So I'll talk about two things. One, what are investment opportunities today in Africa as we see them, and how can we mobilize them? And how can CG modeling help us better understand the nature of these opportunities, the quantum, and their feasibility? And forgive me in advance if I've missed important developments in CG modeling in last years. I'm sure I did. I'll be happy to learn more about them. I'll talk about what I know. And I've been working the last 3 years at IFC, which is the private sector branch of the World Bank Group that invests in firms on Africa specifically at the continental level, to try to understand what could be done better given in this situation, which is extremely difficult. So just to remind us that the African continent is rebounding very slowly from the COVID. It contracted by about 2% in 2020, which is more than 4% in per capita terms, and is rebounded at 4.2 in 21, and will go less rapidly in 22. This rebound is not homogeneous. Some countries that enter the crisis with what we call preconditions, high level of debt, poor level of diversification, fragility, are rebounding less rapidly. And it builds on a trend pre-COVID, where growth has been almost nil in per capita terms since 2015, when the super commodity cycle ended. And what it says is that so if you look at the situation today of course, in terms of poverty, health, etc., it is worse than before the crisis, but also in terms of credit worthiness of firms and governments. We've seen a lot of downgrades, high level of debt. Many firms have actually disappeared, and this in a context of a global financial tightening and accelerating inflation. And all this, of course, does not bode very well for investment opportunities in Africa, given the very high level of perceived risks. And as Célestin just said, this is a gloomy picture. And then the question is, why should we even bother about thinking about investment opportunities in Africa, which is 2-3% of GDP, a risky place with very uncertain conditions. Now, the reality is that we think at IFC that there are huge investment opportunities. The deal of the century, as said Célestin, in Africa, if the continent is able to leverage some of its internal driving force, which are very strong, and that could generate great investment opportunities, in particular by increasing the returns of those investments in this situation where risk have to be also addressed. But I'll talk about risk later on. So those four driving forces to us are the following, and I'll talk a bit more about them. One is regional integration. There's a lot of space to deepen regional integration in Africa at a time where the world is closing because of trade wars, because of actual wars, because of environmental concerns in the north, that will make it more difficult for Africa to access markets in advanced economies. Digitalization is the second very important driving force that could generate investment opportunities, and we've all been surprised by the capacity of the continent to adjust during the COVID crisis and use digital solutions to keep on developing trades, keep on exchanging with the rest of the world. It was a surprise and it's a realization of the adaptive capacity of Africa as a whole. A third very important trend, maybe one of the most important, is urbanization, which is massive, huge in Africa, and that will completely transform the societies and the economic structures of African countries in the next decades. And last, which could be seen as a penalty, but also as an opportunity, which is the need to address climate change, mostly through adaptation through investment in adaptation. Sorry. So I'll go back quickly to all these points. The first one, as I said, to me, the most important one is urbanization, which is happening, and it is being encouraged by the demand for services by citizens like health, education, electricity, digital, security, that can be found mostly in cities, and that really push or pull African citizens to move to cities. In the next 3 decades, Africa will need to build cities to host a little less than 1 billion dwellers. It is huge. And so far, cities have expanded in very informal ways, unplanned ways, and therefore their absorptive capacity and their efficiency has been low. But work is really underway these days to strengthen regulatory frameworks like land titling, construction licensing, tax regimes, and so forth, so as to turn them into efficient and competitive cities. And as cities become more efficient, they will generate additional income and new demand patterns. And investment opportunities then will emerge in housing, construction and finance, urban infrastructure like transport, water, sanitation, services, education, health, finance, but also leisure and retail. The second very important force that we see, which is already happening, is regional integration. Okay, it could be faster, but in the last 2 decades, the share of intra-trade has doubled in Africa. The quality of trade, the goods which are being traded within Africa, is much higher than with the rest of the world. And something which is, I think, not less enough celebrated is the fact that we've seen convergence within Africa between the poorest and the richest countries. Poorest countries have systematically grown faster than richest countries in Africa since 2000, and that's, to me, I mean, that's possibly a consequence of this ongoing regional integration. So we see that in numbers, we see that also in efforts. We, of course, you're all aware of the Africa Continental Free Trade Area, which is being ratified, and that will take time to implement, but the momentum is there, the political momentum is there. We see a lot of progress in terms of trade infrastructure, corridors, customs, regional payment system. And this will create opportunities for investment in all the goods and services that will accompany the regional integration: trade finance, e-commerce platforms, transport equipment, connective infrastructure, but also, of course, also in the development of regional value chains. And here we see particular promises in terms of agribusiness, light manufacturing, and e-services. The third driving force that should generate investment opportunities is digitalization. And in some aspect, Africa is already a front runner in mobile payments, for instance, that suggests its great adoption capacity and adaptive capacity. In the next 2 to 3 years, there will be 2 new submarine cables that will reach the shores of Africa, and that will multiply its broadband capacity by 10. This is a game changer, and this could of course increase. This could lower the cost of accessing internet significantly. Of course, if sufficient competition is maintained between internet service providers. One binding constraint there has been the lack of digital skills and the weak ecosystem that may prevent effective adoption of digital technology by firms and may therefore reduce the rate of return of investing in digital infrastructure. But we believe that the expansion or the development of digital service can be started from those ecosystems that exist already in a number of places in Africa and cities in Africa, like Nairobi, Lagos, Joburg, from where technological services which are adapted to African needs could be exported on the continent, and therefore create demand for digital service and generate productivity. So we see therefore investment opportunities in soft and hard infrastructure, cable, towers, data centers, in digital platforms for telehealth, for virtual learning, for e-commerce, for agtech, fintech, and creative industries. And we see also investment opportunities in the regional expansion of technological companies that some of us call also verticals. And last but not least, of course, is climate change. There are huge investment needs in adaptation and mitigation, which far exceed largely the capacity of governments to finance them, and therefore the private sector need to take the lead, in particular in terms of adaptation investment, for which it has an inherent interest to invest in because it suffers directly from the consequences of climate change. The challenge is, of course, to turn those investments into bankable projects. So we've seen positive trends there. We've seen a rapid progress in technological progress. So rapid technological progress, in renewable energy, in climate smart agriculture, and in green housing. We see progress also in terms of the availability of finance. I think the international community is getting closer and closer every year to the 100 billion target of investment in Africa that it committed to invest in. We see the development of green bonds in Africa, a few still, but they are oversubscribed, and there is progress there. And they are in this environment. There are also a lot of efforts which are on the way to support private sector participation in investment in mitigation and in investment in adaptation. We have the development of public partnership frameworks, some of which have been very successful, such as the scaling solar that some of you might know in Zambia and a few other places. There's a regulation of green finance, on which progress is being made. There's the development of information systems for investors to better understand what are the public investment plans they could leverage, and early warning system on climate also. They need to invest in those technologies. You have a lot of efforts which are being made by the international community on upstream project preparation to develop bankable projects. And you have a number of reforms which are ongoing at the sectoral level, in particular in energy, to encourage better private sector participation. And all this will create opportunities investment opportunities in renewable energy, in climate smart agriculture, in the retrofitting of buildings for energy efficiency, in green urban transport, and in green finance, and that includes as well insurance against climate. Now financing these opportunities will remain an issue, as I said before, because government and firms are financially weaker than they were before. But we also see progress in terms of the financial intermediation across continents and across the economies towards the best project through the development of regional and domestic capital markets, efforts to develop trade, warehouse, and mortgage finance, and efforts to reallocate stranded assets and clear faster non-performing loans. And of course, all this needs to be buttressed by macro stabilization, efforts to address fragility and governance issue, and to improve the regulatory framework to attract FDI and encourage domestic and international investment. We've just concluded a study at IFC on the role that regulatory frameworks could play in Africa, specifically to encourage private sector participation in infrastructure. And the results are not surprising, but they are encouraging, showing that given past trends, and if you were to prolong past trend of progress in setting up regulatory framework or in reversing the deterioration that was observed in some countries, in 4 or 5 years, private sector participation could be increased by about 1 percentage point of GDP in each country. That's an average. Now, how can CG modeling and GTAP specifically help us with this agenda? I think the, modeling can be extremely helpful in establishing credible estimates of investment opportunities, accounting, of course, for the structural features of the different African economies, the general equilibrium effect, and by measuring their welfare impact, and as establishing those credible estimates. It will contribute to inform investors, public and private, on the risk and returns of various investment choices. So CGs are doing a number of good things. And again, I may have missed many things, but I think there are a few things that could possibly be improved to better understand those investment opportunities. The first one relates to the feasibility and impact of adopting new technologies that I mentioned before. First one are climate change adaptation technologies, for which international and domestic markets are still largely inexistent or inefficient. As I said before, unlike for mitigation, private operators have all interest to adapt because they are de facto internalizing the consequences of climate change, but they are very often unaware of the technological solution that could be available. Those solutions, technologies may not be there on their local markets, and the finance is not either necessarily there for that, despite the potentially good returns and low risk of those investments. The second technologies on which we need to understand better is digital solutions for firms, governments, and households to trade, to intermediate finance, to reach scale, and to make efficiency gains. Now, the supply and demand for these technologies, or the markets for these technologies, are not well monitored. I don't think they actually exist in most of the SAMs, and I don't think they are modeled in most of the CGs. And it would be very important, in my opinion, to try to make a strong effort to model those markets, supply of technology, demand of technologies, what could accelerate the adoption. The second group of things the second group of issues where probably CGs could do a better work is in terms of specification and assessment, is in the mobilization of savings and their intermediation. When I last did work on CG, we were still using investment saving closure rules. We fixed exogenous FDI or FDIs in global models that with perfect capital mobility and allocation, even if differentiated by vintage. I don't think this is sufficiently satisfactory to capture what is happening in Africa today, and maybe some efforts could be done in that regard. And let me be a bit more specific here. One, when you look at the consumption savings ratio of African households, which may be quite invariant in the short run, I think they will evolve quite rapidly in the medium term with greater financial inclusion, the development of an urban middle class, and the demographic transition. This probably needs to be better captured in CGs to better understand the availability of domestic savings. I know too that there were efforts that are being made to endogenize foreign direct investment, and I've seen a few papers on that, but I sense that a few dimensions of the determinants of FDI could deserve more attention. The first one is country risk. A huge issue I didn't realize before I joined IFC, for instance, is that convertibility is still a major issue for investors in many countries in Africa. Of course, the importance of regulatory framework and competition is key. And some of these could be endogenized. If you take into account the impact on macroeconomic and governance risks, this could be endogenized. Second is there are the policies that are favoring the integration into regional and global value chains. I don't know if CGs are recognizing value chains per se, but clearly there's been a driving force for foreign direct investment in recent years. And even if we're talking now more of regional value chains is the same, I don't know if CGs are able to recognize value chains specifically. And then I think it would be interesting to look at those policies that could encourage investment through the greater attractiveness of African countries to participate to value chains. A third one, which I found a third dimension of FDI, which I realized was probably quite important, are economies of scale. Many FDI projects need to reach a minimum scale to be perceived as viable by investors, and I don't think it is often always captured in CG models and when you're trying to explain the determinants of FDI. And likewise, that's something I've learned also at IFC, which is going to be difficult to probably to model, but the importance of demonstration and learning effects of these investments in frontier markets, notably when investors come to invest in a new market. By demonstration, if the investment is successful, that generates a lot of new investments, just because knowledge is there now. And there may be a way to model that too, as it is being done for the adoption of new technologies, for instance, where you have adoption curves and things like that. And the last one on FDI, which I think is also very important, is to think about the complementarity between public and private investment in many sectors, and in all PPPs in particular, where private investors really need to understand the situation of course of the sector, but the role of the public sector, the utilities, etc., to invest, and that's a very strong determinant of foreign direct investment. Another aspect of foreign direct investment, I think, which has been a bit overlooked, is trade finance, which is key in particular these days for importers who are looking for alternative source of imports of wheat, etc., and for food security. But we know that African trade has been very weakly intermediated by banks in comparison with the rest of the world. Less than 40% of trade is being intermediated by banks against more than 80% in the rest of the world. And progress to improve on trade finance and better understand the determinants of trade finance could go a long way in fostering African trade overall. And I think it has to do a lot with the relation with corresponding banks. And so if we could also better understand the implication of reforms to improve trade finance, that would also be probably very, very impactful. And last, I'm going to talk about intermediation of savings, which I think could also be modeled maybe a bit more specifically to take into account Africans' realities. We know that the intermediation of savings in reality is far from being perfect. Most African banks are highly, or some even say excessively liquid, and savings clearly do not flow to high return sectors. Government often have the monopoly in local currency borrowing. State-owned enterprise benefit from preferential access to credit, and exchange rate controls affect the efficient allocation of foreign exchange. On the other hand, progress is being made to improve SMEs' access to credit through aggregation, through the development of partial credit risk guarantees, through credit infrastructure, and non-performing loan markets are being developed in a few countries, and they facilitate the reallocation of existing capital across firms. And I think some of these features need to be better captured in CG models to really better understand the role that intermediation is playing, and therefore the impact on returns and investment allocation. Now, if you were able to develop the data that would need to be developed and improve the specifications along the lines that I've mentioned before, I think that would be really helpful to understand the challenge and opportunities of promoting through policy reforms and aid the investments that I mentioned before in digital infrastructure and IT services, regional credit infrastructure and regional value chains, urban development, and adaptation to climate change. So I hope GTAP can work on these aspects, and thank you very much for your attention.
Thank you so much. You've given us a lot of material here for food for thought and even some interesting issues for debate and conversation. I don't see questions in the chat, but I see Dominique here. So Dominique, How do we proceed? If there's no question, of course, I can ask a couple of questions to Sebastian, but I'd rather give a priority on the floor to participants if they have issues that they want Sebastian to.
So people will raise their flag if they have something to ask. I might start off. Sébastien, it's obviously a very heterogeneous region, but it seems to me that a large majority or a large share of the investments are really focused on extracting natural resources. I suspect the IFC isn't as involved in that as maybe the private investors, but is there a way to kind of bend the curve there and get more investments in other sectors?
Thanks. Yes, FDIs in particular are still very much going to commodities and to fossil energy and Célestin. If you look even at the more recent data on cross-border investments in the first part of 2022, they've been going to a big part of it has been going to Uganda and another in oil and gas, and another part in Morocco. So I don't know to respond to that question. There will be forces to reduce the demand for oil and gas, and that may reduce the appetite of investors to go there and maybe go elsewhere. The finance won't be there. The demand for oil and gas hopefully will be reduced over time. So that's one aspect. We are looking at IFC, of course, at other sources of investment, other destinations of investment that might be more impactful for the development. Now, I must say too that there is a debate ongoing these days on what should be the right level of what the right balance between still investing in oil or not investing anymore in oil and gas for many of the countries that will finance their development with oil. Senegal has found oil and gas. Ghana is betting on oil and gas. Namibia just found gas, and they're still counting on that gas and that oil to finance their development. So there's a debate ongoing on what should be the right balance. But obviously, our efforts are to promote the non-extractive part of the economy because it is, it's more impactful for jobs and inclusion.
Okay. Well, I still haven't seen any flag raised, any hand raised. But let me ask Sébastien, since we still have a few minutes for you. First, thank you very much. This is quite a tour de force in 20 minutes to cover so much ground. I was a bit surprised that you did not include demographic transition among your 4 driving forces. You mentioned it at the end, but I would have thought that it's potentially one way or the other a very strong underlying force. But that's just a matter of preference. In terms of specific questions, you talked a lot about the policies, obviously. What new policy, what different policy would you recommend in terms of investing in Africa from the perspective of African policymakers? You talked about prudent macroeconomic policy, macro stabilization. But many African leaders will tell you that they've been doing this more or less for many years. And as you said, the overall picture is still quite gloomy. So are there changes that they might consider in macro policy, for instance, or any other area? And then a smaller question. You stress this very important point that banks in Africa are very liquid. In fact, research from the World Bank shows that they tend to be the most profitable in the world. They calculated what they call the Z-score, looking at profitability of banks in different places around the world. And it would be surprising to many people to realize that banks are very, very profitable in Africa. So they are profitable, but yet they are not financing investment, transformation, industrialization. Is there anything you might want to share or discuss there? Thank you.
Thanks, Célestin. Macro policies. I don't have super strong view, but of course, I mean, some countries have gone probably too far in terms of their indebtedness, and that this need to be corrected. So of course, we can go back to stabilization, and that's going to be tough. That's going to be painful. The absence of which is also could also be very damaging. To me, the reality is that my stance is that most of the countries in Africa are in that situation because they've been investing poorly their borrowings. They've borrowed, but they're not investing properly, and that has to do with the landscape, the investment climate. I mean, it can take many aspects, but competition is very important, or lack of competition is very important, and that's why I hope that the Africa Free Trade Area could play an important role. Regulatory frameworks, the role of SOEs is not always clear. That's another very important. So I will focus more on the investment climate, where I think a lot can be done to really improve the returns of those investments, the good allocation of capital. And there are also a lot of structural policies that are like urban management. To me, will be extremely important, because I mean, we've seen the development of African cities a bit informal. I mean, I remember, for instance, I was in Ghana. So you hope that the city will densify to create those agglomerations, economies of agglomeration, those positive externalities that cities can do. When I was in Ghana, I realized that while the population doubled, the land, the urban land tripled. So the cities have been de-densifying, which is completely the opposite of what you're looking for. And that goes against. And that, of course, that reduces any return to investment. So no, there are a number of things. There are a lot of markets that do not exist that need to be created and regulated. And I'm thinking all these markets on technology. To me, the technologies for adaptation will be key. The finance for adaptation will be really super important. And we're talking of billions of dollars. I mean, and it's in the interest of the private sector to do that, because they want to protect their activities, or they go if they have no option. But so I'll be looking more at this type of policies. I've not mentioned demographics. Of course, demographic is important, but when it comes to investment opportunities for the private sector in particular, probably investment in the youth, in TVET and those type of things. But I think the real push, the real game changer will be urbanization, which is obviously linked to demographics. But that's going to be a game changer, because you create a middle class, you completely change the relationship between the rural zone and the urban zones. You might create much more intra-trade also within countries in Africa. You will have to serve consumers of African cities, and that makes a big difference.
Thank you very much. We still have a couple of minutes, so I'll take another question from the chat from Onur Yik, who is asking you. I think you already answered to the first part of the question, because he was asking how could African country attract FDI, and then he focuses on global value chains, and asking how agglomeration could work through global value chain. And more important, at least in my view, he asked, how could African countries improve their participation in global value chains?
Well, there's a big literature on how to attract or to participate more in global value chain. It's very much about the supply capacity, the capacity to reach a level of the quality and the scale in terms of production of a given part of the value chain. It means also a good trade system, and not only on paper but also trade facilitation to import and export, to be able to import also the right skills. A lot of countries have difficulties to import skills, or willingness not to import skills. I've seen that a lot in Southern Africa, for instance, where skills is critically missing. But countries are still don't want, for political reasons, to attract more skilled workers. I think it's important. Now, what I'm thinking is that regional value chains should deserve much more attention. There's also an issue with global value chains which de facto impose a technology on African firms or level or standard, which make it difficult for many companies to comply with, or that force companies to go against their natural comparative advantage. And I think the development of regional value chains, maybe of goods which are maybe of slightly lower quality, could go a long way, because that will make also the countries and the companies are more competitive on their regional markets.
Well, thank you. Thank you very much. I don't see any other question. We still have like a minute, so let me exploit shamelessly my position at the chair to make this one small comment. The global value chains, that's where most of today's trade occur. By some estimates, more than 60% of global trade takes place through global value chain. Now, the past couple of years, with the disruption in supply chains, have raised other questions. And some countries, including rich countries like Canada, France, United States, have decided to kind of put some constraint on global value chain by relocating in their countries, in their own countries, the production of goods which we thought would be left to labor-intensive, lower-wage developing countries. So I personally believe that it's the wrong move for the global economy, for global peace, for global stability. So when you look at the countries around the world which have made it the past 100 years, well, it's been mainly through trade. And it's critically important for global stability, global peace, and I would say even in the long term for global demand, that developing countries be given the opportunities to produce and to sell their goods. And I think that the disruption of global value chains is hiding the return of some protectionist instincts, which may be short-term politically beneficial, but medium, long-term not good for the world. But that's just my personal opinion. Still no question, but that's good because we've reached our time for this for your session. So I want to thank you, Sébastien. I hope you stick around for Stephen's presentation. I don't know, Ginger, Dominique, if you want a minute break or if we move directly to Stephen. What is your preference?
Let's go straight to Célestin.
Okay, wonderful. Stephen, I want to introduce you. Your bio is available to everyone. Let me just say that every time I see that there's a new government in Kenya, I always quickly look to see if he has joined the cabinet. And the guy is not going. He's been hiding at the United Nations for 18 years, doing great work there. But I would like to see him at some point living the comfort and the suit and ties of the UN top researcher and go home and do real work. Stephen is obviously Kenyan. He studied in Kenya, but also in a foreign, far away, exotic place called Australia. For many of us, it's like going to the moon. That's where he did his PhD and worked there. And he's been doing fantastic work. And he holds this key position at the United Nations Economic Commission for Africa of Director Regional Integration. And I have 20 questions already that I would love to ask you, but I suspect his presentation will generate good interest too. So go ahead. I noticed that you have a very long PowerPoint. Please try to stick to the time so that we can have an exchange at the end. Stephen?
Thank you so much, Célestin. Let's see. You can hear me, eh?
Yes, we can hear you.
Okay, let me minimize. How comes? I need to reduce the. I thought I got this right.
No, it seems perfect to me.
Yeah, the thing is, it is blocking me this side, so I'm trying to see how to reduce my view to the small, to minimize. Let's see. How is this happening? Okay, okay, no worries. I think I got it. Yeah, okay, so thank you very much, Célestin, and thank you for the kind words. I don't know whether I'm going to join the administration. That is a conversation for another day. And hopefully by the end of this presentation, you may see why maybe I want to stay in Addis and not go to join the administration in Nairobi. Now, so my presentation is, so let me first of all thank the GTAP team for asking me to make this presentation to be part of this plenary. And my presentation is entitled on transforming challenges into opportunities and trying to sort of motivate a positive agenda for the modeling community, both within the continent and outside the continent. Earlier this afternoon, I attended a session that was organized by the WTO on the issues of climate change and trade. And we had a short conversation towards the end, and Bob talked about leveling the playing field in terms of the conversations about trade. And I sort of felt like maybe I should have entitled my presentation leveling the playing field for policy making and negotiations, and then I say a call to action for the continent. I am saying this because what I'm going to show is the kind of work that the ECA has been doing to try to sort of democratize the conversations, first of all about regional integration and trade, but also the relationship between Africa and its partners, either bilaterally or globally when it comes to discussions about trade and also investments. Now, and then I'm going to indicate the opportunities that the community now has, because there has been an improvement in terms of the coverage of African countries in the Global Trade Analysis Project database. We generally call it the GTAP database. Many people may have said in the past, we don't have good coverage of the African countries, so maybe at the margin, maybe let me just not do CGE modeling. But I think now I will demonstrate that we no longer have that as a reason, because there has been a lot of investment in this. Then I'll give examples of why this is critical, how we have used this kind of democratization of policy analysis for engagement in the continent. And then I'll highlight some of the challenges that the continent is facing today. When Célestin, you joined us earlier today, we were talking about the question of the food crisis. So I'll talk about these challenges and then pose the question whether we can actually use these kind of modeling facilities to be able to answer those questions. And then look ahead to some of the things that Sébastien actually talked about, things like climate change. So at the Economic Commission for Africa, we could say that we are probably one of the institutions in the continent that has actually been using a lot the GTAP database. And it was not by accident that the Economic Commission for Africa started investing in this area. It's basically because we realized that African ministers or African governments were engaging the other members in the WTO. They were engaging the Europeans under the EPAs. They were talking to the Americans about AGOA, and they did not always have that consistent framework within which they are able to talk with one voice, or at least form a sort of what we call consensus. So we started investing in this area. At the moment, we have just established what we are calling the Young Economists Network, and I know Célestin and other professors here would be very happy. And what we are hoping to do is to sort of empower this Young Economist Network based on the experience we have on using this kind of tools, so that they can start answering some of the questions that their governments have. Now, and of course, within the ECA, it is not just now the division that I'm in where we use the GTAP tools, but we also have other sub-regional offices, especially the one in your country, Célestin, where now we have additional capacity where they can actually be able to do modeling work using GTAP. And maybe I'll mention that. And then, of course, our training institute in Senegal. So I said that there is, I'm basically making a call to action because before the end of 2020, you can see to the left of your screen, we did not have a lot of African countries that had their countries disaggregated within GTAP. And even for those that were there already in GTAP database, some of them had outdated database. But we made a conscious decision to start investing in making sure that the updated national accounts that African countries are making are made into supply and use tables, which then can actually be used as a basis for the contribution of these countries in their disaggregation within the GTAP database. And you can see the kind of progress that we have made. So if there is any researcher today who would want to understand the question of the East African community, South African development community, the question of food security in the Sahel, what is happening in the Horn, and you want to look at that issue from a multi-regional, multi-sectoral dimension. Now we have a situation whereby the most recent data that has been released, I think this week or last week by the GTAP community, we can actually be able to do more with African countries. And now if you complement this with the household survey data that the World Bank has actually been investing a lot, and other international institutions have been investing a lot in its production, and also the work of the OECD on the trading value added database, then we can actually start telling the story of the African continent. So now we no longer have any reason not to do this. Now, just to give an example, Africa is faced with a major issue of illicit financial flows. We are aware of this, $85 billion, as they say. You need about $33 billion to close the education gap, education financing within the continent, and I think $66 billion every year for the health. Now, we were able to work with the Thabo Mbeki high-level panel on illicit financial flows. I don't know whether this time you were at the ADB, Célestin, I think around this time. We were able to use these tools to estimate the trade misinvoicing and the economic impact that was having within the continent. So we were actually able to present to the Mbeki panel evidence of what it means of what Africa was losing. Then, of course, towards 2015, there was this big conversation of, are we going to extend AGOA? Do we do it for 5 years? Do we extend the number of years of this extension? How do we make it more effective? Again, we were able to use these tools, working closely with the Brookings Institution to inform some of the conversations that were taking place within Washington and even in Congress. But the most important thing is our ministers were actually able to engage the American counterparts with information of based on the various scenarios that we had. And then, of course, in 2012, the ECA in the lead up to 2012 and immediately after 2012, we did a lot of work to demonstrate what the AFCFTA mean. During the negotiations, some of the modalities that were agreed in terms, not just the 90% and the 7% and the 3%, but how do you ensure that the 90% tariff lines give you 90% of the intra-African trade being liberalized? We used this tool so that we actually had articles that ensured that you do not have a sort of a liberalization that was not effective. So this is just an example of how we anchored our modeling in the policy formulation within the continent. Now, coming now to, and I could give more information because I want to prove Célestin wrong, that I can actually do it within 25 minutes. Now, coming now to the question of the current challenges. We know that COVID came to the continent, just like it came to the rest of the world. And then, alas, we found that most of the pharmaceuticals that Africa consumes, including PPEs at the time, most of these things were coming from the rest of the world. And so and you can see we have actually been doing a lot of trade as a continent with the European Union, where we get most of these medicinal and pharmaceutical products. And we can talk again about the need of pharmaceutical manufacturing plan for Africa and how we were found caught short, yet we had that plan. So we have these challenges that of the external dependence to our health sector. So we cannot even be able to think of being health secure, having a resilient health, having resilient economies, when most of what you need to keep your people working or your population working are sick and you're at the mercy of the rest of the world when it comes to this. So this is a challenge that now presents itself as an opportunity of how do we address the production of pharmaceutical commodities for a secure health sector within the continent. And to the right, I basically give the evidence of what it would mean just using the numbers from COVID. If we do not do anything like what, and we are met by the next pandemic where COVID met us, you can see the number of poor people that fell, the number of people that fell below the poverty line just within a year because of COVID. So we believe that the tools that we have here and the researchers that we have here can actually be able to address this question. And today we had one of our colleagues making a presentation on taking stock on COVID-19 impacts on Africa, and the GTAP model was very useful. The second one is on the shock of the Ukraine-Russia crisis. We know it is exacerbating the food and energy insecurity across the continent. You can see the huge dependence of the continent and also, of course, the international community to the two countries. And this does not bode well for the continent. So the big question is, because as you can see, many African countries, they import over 50% of their wheat from Russia and Europe, if you look to the right panel. For a country like Benin, almost 100% it imports from Russia. And then you have a lot of many other countries that today are facing a food shock because of this dependence. And so the big question is, how do we transform this challenge into an opportunity? Now, at this point, I would want to say, we basically know what to do. And the GTAP tools have basically, and the database and the modeling that we have done with the CEPI has actually been able to demonstrate to us that if we were to implement the AFCFTA, we will not only grow our intra-African trade, which, as Sebastian said, is of higher quality than most people think. But if you look at where this growth is going to be fully implemented by 2045, you would have an expansion of agro-food. So the shock that we are having today from the Russia-Ukraine crisis would be easier to mitigate. Our services would also grow. Our industry would grow. And if you were to disaggregate a little bit more, some of the sectors at the lower end of the lower panel of this chart, you would actually see things like pharmaceutical products. These are areas where there's going to be rapid growth in the expansion of manufacturing within the continent. So the question that I posed about the pharmaceutical and health security, the AFCFTA is already simulating the AFCFTA. We are already seeing evidence that we can actually be able to deal with that. Similarly, in the area of agro-foods. Now, we talked a bit about the issue of energy commodities. Our analysis showed that there's also going to be growth in this. But then, of course, there is that question that everybody is asking. How do you deal with the question of moving towards net zero? But then there is also the question within the continent, how do you get this just transition? Just to say that this work that we have done is validating and validated by similar analysis from CEPI, from the World Bank, from the IMF, from IFPRI, and also from TRADA. So this answers the two questions that I posed. Now, but now here we are. We have a lot of resources within the continent. And how do we diversify our economies so that at least we can be able to create the kind of resilience that we need? I bring this issue here because we believe that there is an opportunity for much more deeper research for the research community that is here. And I just want to give the numbers to show that today, natural resources rent account for a huge component of GDP within the continent. And clearly, we need to ask ourselves, how do we increase the value addition in the primary sectors, especially now that we have seen the AFCFTA can actually lead to that. How do we move out of the merchandise trade, which now, if you look to the chart to your right, you see that most of the merchandise exports from Africa, they're basically raw materials. But when you look at Europe and Central Asia, it's actually manufactured, or even East Asia and the Pacific, which is something that we know. But even in Latin America and the Caribbean, you see there's better performance in manufactured exports than what is happening in the continent. So this is a challenge that the continent has to face. We believe that the AFCFTA is offering us an opportunity. We can diversify our export portfolio first by growing our intra-African trade and being able also to produce competitively for the rest of the world. And we can come back to that because of the phase 2 issues of the AFCFTA. And we need to be able to demonstrate this from a policy making by modeling this structural transformation. So basically, again, I'm calling people to action. We've already started doing that within our regional office that is based in Yaoundé, and they are looking at how do we do this diversification, because as you know, Central Africa is one of the sub-regions within the continent that is missing most of this diversification. And again, there is a bit more again using these tools. Sébastien asked the question, and you, Célestin, you asked the question about the global value chains. We believe that the AFCFTA is offering an opportunity of strengthening regional value chains within the continent, which of course brings me back to the question of data, because we cannot be able to tell about these regional value chains unless we are able to understand the trade also in value added. But we believe the AFCFTA is offering that opportunity. So if it was possible then for the researchers here to use the multi-regional input-output database that already has its own GTAP configuration, we can actually be able to answer the question that Sebastian was saying: can the GTAP, can the CGE models address this question of the GVCs? And maybe we can also be able to answer that question that you asked Célestin as the chair. How do we deal with this question of globalization and deglobalization, and what does it mean for Africa? So this is just to give you a much more interesting example is the case of battery production. According to Bloomberg, electric vehicles represent about a 7 trillion market opportunity by 2030. That is expected to grow to about 46 trillion in 2050. And this is because of the move from, towards having sustainable production and sustainable consumption. Now, most of these electric vehicles obviously would depend on lithium-ion batteries. And it so happens that what you need to produce lithium-ion batteries, 50% of the cobalt that you need of the reserves and 70% of the world's production is actually in the DRC. Now, so the question one asked is, okay, so if you have a 7 trillion market by 2030, how much of that is going to the DRC and the other countries that I demonstrate here that are involved in the production for cobalt, copper, graphite, lithium, and manganese? How much of that 7 trillion is going to go to these countries? And if you were to project further, because we talked about demographic, there is that question of the Africans. By 2050, how much of this 46 trillion would go to Africa? So there is merit now for us to use, again, the tools that we have before us to try to answer, to demonstrate that, yes, having good policies and then that demonstrates a reasonable green transition by exploiting through creation of value chains that are anchored from where most of these materials are coming from. It is possible to deal with the challenges of incomes and poverty as we move forward. So this again is a call to action to this. An important research question for anybody who wants to talk about diversification within the continent and regional value chains within the continent. Then the other question that comes to mind here is the big question about climate change. Obviously, we are going to implement the AFCFTA. There is evidence that shows that as you liberalize trade, in some situations, depending on what it is that what you have in the structure of your economy, carbon emissions may increase or may reduce, but it does also create opportunity for countries when it comes to addressing the question of the sectors that are going to grow as we move towards net zero. So what is it that we need to do under the AFCFTA so that it's not only sustainable, It's not only sustainable, but it does not lead to the kind of industrialization that we do not want to achieve. So there is a policy question here to model the impact of the AFCFTA and climate change. We've already started doing that kind of work here at the ECA. But there is also the question, because again, during this conference, I attended the WTO presentation where they talked about the carbon border adjustment mechanisms. And there is the question, is it possible that we are going to have a situation whereby we use the AFCFTA to grow regional value chains, but then those regional value chains, the minute the intermediate inputs from those value chains reach to the rest of the world, they are hit by these tariffs that are driven by the border adjustment tariffs. So there is a question there for research for anybody who wants to at least ensure that Africa is involved in the conversations in the climate change. And now coming to conclude is to talk about the importance of the digitization. We did a small survey during the COVID, and we found that during COVID, a lot of African businesses did actually adapt by going digital. In fact, below there, some of the things that they did was to acquire adequate technologies for their tools. They trained their workers. They did their campaign digitally. So they did a lot of things to take advantage of the digitalization to sort of keep their businesses running. So there is this question, how do we leverage digital trade? What do we need to do to leverage digital trade? Not only to optimize the AFCFTA, but also to optimize the presence of African products and services globally. And so one of the other things we have done is to work closely with OECD to give them some survey that we have done about digital services integration within the continent. And by so doing, we are increasing the number of countries that are part of the Services Trade Restrictive Index that is produced by the OECD. And we believe by ensuring that the African countries are reflected in the OECD Digital Services Trade Restriction Index, it will be possible for us to combine that with the tools that we have under the CG modeling. Of course, it also calls for econometricians to be able to tell the story why we need to have the AFCFTA protocol on digital trade and some of the elements that they should focus on and the kind of investment that you would need for you to ensure that Africa is not left behind under the IR 4.0. So essentially, we have an African Union digital transformation strategy, but for that strategy to be taken forward, we need countries to be able to see what does a single Africa digital market look like, and what is it that it can foster. From a policy perspective, we have ECA has established a digital center of excellence, and we hope that some of the work that we are doing with the OECD and the work that we are doing here at the ECA is going to create some appetite for the researchers here today to want to answer this question of digitalization. So thank you very much. I tried to rush through it, but at least I hope people understood the call to action that I wanted to send. Thank you. Thank you very much, Célestin.
Well, thank you so much, Stephen. Another very rich presentation. And yes, I should apologize for doubting that you would be able to cover everything. I mean, there's so much work behind this. I hope it will be published at some point. I don't know if GTAP has some kind of website where they can circulate these slides. I certainly will be using some of the elements in my own thinking and work. I've seen a small discussion in the chat about whether African countries would ever be able to be self-sufficient. Andrew Mould seemed to doubt it, but Sébastien has responded with some numbers. And perhaps I should, while waiting for, I mean, I'm surprised, such a fantastic audience. I was expecting a lot of questions, but people are very kind and polite. Clearly, you don't have enough Cameroonians participating in this, because the Cameroonians, you will have fireworks already, everybody challenging everything you've said. Yeah, thank you, Ginger. I see that Ginger has already indicated in the chat that Stephen's slides are available on the GTAP website. That's fantastic. I'm going to quote and cite that. Yes, let's start maybe with Sébastien and then Dominique, who have raised their hand. Please go ahead.
No, maybe the reason why there are not so many questions is because both Stephen and I have actually raised questions to the GTAP community, and maybe the community is shy to answer them. I don't know. It's more the other way around. So we've been calling for action, and we are looking for answers now.
Interesting. Yeah, Dominique?
I have all the answers, of course. No. So let me answer a little bit, Sébastien. Stephen probably knows the answers because he follows us pretty closely. But and so on the global value chains, of course, we do have the MRIO database now, so we can look at some of these issues a little bit more carefully. And I'm really happy to see that that work is ongoing on the continent. The database has its flaws, so and Stephen knows that everything's about good data. So we still need to lean on UNCTAD to make sure that the trade data in particular can be improved. One of the other areas I think where we've made some progress, Sébastien, is that we can now model trade now at the HS6 level within the GTAP context. So if there are specific areas, for example, I mean, think pharmaceuticals, which you mentioned, where we can drill down on the trade in more detail than we do with the standard GTAP database. And there have been modeling efforts in this area, not so much in Africa so far, been more in the US and the EU, but I think there has been progress there as well. Same with FDI. We've been working with the WTO on improving the modeling of FDI and foreign affiliate sales. So, in kind of a lot of the different areas, there is progress. One of the interesting presentations that both Stephen and I went to this afternoon, also at the WTO, had to do with knowledge spillovers, and obviously for a continent like Africa, which has limited research, how to capture that knowledge that is being developed elsewhere is really, really important. And so again, there have been efforts within the GTAP framework. Now let me ask my question. You both kind of mentioned demographics, but what I am seeing at any rate with the UN projections is that the demographic transition is not happening in Africa like it's happened almost everywhere else. In fact, if you look at the revisions of the population projections of the UN for Africa for the last 4 revisions, there's been an upward revision for the continent. And it seems to me that this is really an important development mechanism. And I don't know whether Africa can bypass that demographic transition and still be successful. Thank you.
Well, thank you. I'll give you, Stephen, another minute or two to respond, but let me go to Marilla, who has a question.
Thank you so much, Stephen, and also Sebastian, both of you, for the interesting presentations. I just wanted to express my appreciation for all the work done by UNECA, not only in terms of generating new sums that then the World Bank can use in our work, but also of course the fantastic research and analytics supporting the negotiations of the AFCFTA with practical tools, but also training the future CG modelers that will be embedded in several countries. So it's a very impressive what has been accomplished so far. But I wanted to ask you whether there's any efforts in trying to gather data on informal trade flows, because we know that for many countries, these far exceed the formal trade flows, and all of this modeling, amazing modeling that that you guys have been doing, we are always struggling with the fact that we are heavily underestimating the trade flow. So just a plea for action, since you're doing so much amazing work, maybe you could divert some of the attention to the informal trade flows as well. That would be extremely helpful. And then there was a bit of a side discussion on chat between Sebastian and Andrew. And I just wanted to say that once again, GTAP data comes to the rescue, and you can look at the share of wheat of imports of wheat in consumption, and that's that's another important metric to consider when you think about the impact of the crisis on the countries. So that's it. Thanks a lot.
Thank you very much. We have about 3 minutes or 4 to wrap up this session. Let me ask you a question, Stephen, which you cannot respond to because we don't have time. I was fascinated with a lot of things in your presentation, starting with the great work that you're doing to use economic modeling to improve policy formulation. And this, of course, goes through training. I remember what I thought was the highlight of my World Bank career was to try to do exactly that, because I was sick and tired of being an economist of the World Bank to go to Africa and come up with the analysis and have them sign some policy document, go to the board and send them money. And do that every 6 months. So we came up with this same idea. We need to train them, identify, I don't know, 200 people who are middle-level technical guys, central bank, ministries of finance, sector ministries, who would be trained in econometrics, and we would be able to develop some of their own tools or adapt some of the World Bank tools to do exactly that. We did that. But unfortunately, most of the people who were trained and the best candidates, the best people, including from the government, left after they were trained. Their skills, newly acquired skills, were never used, and they all left. The World Bank even recruited some of them. So I wonder whether you guys have been thinking about this, because it's not just about capacity building. To me, it's also about capacity retention. But again, more commentary than a question. And a small technical thing which may or may not be relevant for your modeling work, especially on diversification, global value chains. How do we really calculate manufacturing value added in the world with global value chains taking increasing importance? When I was managing director at UNIDO, I kept challenging my research team and the director of research to come up with, because they've been using the same indicator for the past 50 years. And I kept telling them, something must be wrong here. Maybe we are doing double accounting somewhere. Somebody needs to put the team together, sit down and really reflect and reconstruct what would be a valid and legitimate indicator of what manufacturing value addition means today. And not to mention the blur lines today between manufacturing and services. Some services have become tradable. So it's not always clear where the boundary is. 50 years ago, we thought we knew for certain. But you go to some places today, you see grocery stores doing banking. You see, factories doing things which you would consider services. So I think there may be some technical work there for another period. But let me give you 1 quick minute, Stephen, really to just maybe acknowledge questions and send people to sources. We don't have much time left.
No, thanks, Célestin, and thanks, colleagues, for the question. So we have actually good news for you, Mariara, on the informal cross-border trade. So we did a pilot in the Abidjan-Lagos corridor, which of course the bank has invested a lot in that. But we did that pilot during the time of COVID. So we are reinforcing our work on that corridor. But at the same time, the African Union Commission has established a working group. In fact, in the next ministerial, which is happening, I think, in a month or 2, we are going to present to the member states a concept where they are going sort of to accept that the methodology that is going to come out of this working group will sort of be binding or committing them to collecting the informal cross-border trade going forward. And you can understand why it's important to work with the AU, because then that data become official. and they validate it, and then it becomes very useful for the rest of us. So that's a project we are doing with Afrexim Bank, and we hope to finish it in the next 1-2 years. On your point, Célestin, on the manufacturing value added, I was actually going to say that maybe the improvement on the trading value added work might actually be able to help us understand more the manufacturing value added. There are much more interesting people in this session who might be able to tell us that. But that's my take, that I have better understanding of manufacturing value added through the trading value added. And that is why we're investing a lot of time as ECA to ensure that today it's only 2 countries that have, I think 3 African countries that have TIVA database. So we want to ensure that we have as many countries having this database, which probably can actually help us answer this question. And I'm not going to comment on the demographic transition. Maybe we need to do a bit more work on that. And I agree with you. Let's keep training. Let's not give up on training the capacity of these young people. If the international institutions take them, let's keep training. And hopefully we will deepen the pool, and we'll be in a good place. Yeah.
Thank you very much. I won't be summarizing anything. Let me just say one quick sentence, so 3 small points. First, from what I understood in these 2 presentations, it's critically important that GTAP keeps coming up with great analytical work so that policy is anchored in the analytics on evidence. Second, it's very, very important that dissemination takes place, including through the training, through the expansion of the network. I'm very pleased to see so many people, especially from Africa, getting connected to this network. And I agree with you, Stephen. It actually doesn't matter where they are. I mean, it matters a little bit, because if you're working for the government in Burundi and you hold a key position there, it's great that you have the tools to help your minister make tough decisions, rather than simply being at the World Bank. But it's, in any case, an improvement that people have skills. And third, last little point, which is certainly a little bit beyond this conversation. Well, the institutions. How do we build enduring institutions to do this kind of work so that at some point even GTAP becomes less relevant? You know, the World Bank had this fantastic motto, which I love, which is, our dream is a world free of poverty. And the World Bank president said that our dream is to be out of business so that there's no more poverty in the world. So we could hope that maybe one day the work that we're doing is being done already in a very creative way around the world, so that the university doesn't spend too much resources on this. But again, thank you very much. Thank you, Ginger, Dominique, and GTAP team, and thank you, Sébastien and Stephen, and thank you to all the participants for a fantastic session. Over to you, Dominique.
Thank you, Célestin. It was very nice of you to chair this session, which is a very important one. We're sad that we weren't in Kigali. It would have been, in some sense, more relevant, but that's just postponed till a future date. I'm going to have a few, hopefully not too long, final remarks now on the conference. Let me see if I can bring up my PowerPoint. Yeah, is visible?
No.
Good. Let me start with the thanks. There are a lot of people that are involved.
Yes, we can see it now.
Involved in making this conference successful. To begin with Stephen Karingi and his colleagues who had proposed the Kigali venue and certainly had put a lot of effort in making it work. Unfortunately, it wasn't just going to happen this year, but I'll get back to that at the end of my comment. All of you know that Ginger runs the center. I'm just the figurehead, so a great deal of thanks to Ginger and the other staff that helps, notably Jeremy Douglas. Many of you don't know Jeremy. He works in the dark recesses of our building, but he's a very important person in this as well. Then we rely a lot on the GTAP community, the program committee, the reviewers of the abstracts, the hosts of the sessions, the chairs of the session, and of course the speakers, and a great deal of thanks to our two plenary speakers today, but also the two that we had on Wednesday. So many thanks to all of you. One of the greatest pleasures of being director of GTAP is the award ceremony. So I'll be going to that next. Normally we do that at the awards dinner, which is held often on the Thursday night. But I'll be doing this electronically, of course, today. So let me start with the Ken Pearson Award. This is awarded to an early career researcher who is active in undertaking model-based analyses of real-world problems using GenPack. So this is funded by the Center of Policy Studies at Victoria University, and we're very honored to give the award this year to Mohammed Rahman, who is a PhD student at Waikato University and the National University of Singapore. So congratulations to Mohammed. The next award is the Alex Marrows Thomas Rutherford Award, awarded to an early career researcher who is active in undertaking model-based analyses of real-world problems using GANs. All right, this is funded by the GANs Corporation, who are also very generous with this. This year, the award is given to Talent Nesinipano, who's an economist in Zimbabwe. So congratulations, Alan. The third one is a relatively new award in honor of Wally Tyner. Many of you may remember Wally, who passed away very rapidly a few years ago. This is awarded to early career researchers undertaking policy relevant analysis in the interface of the economy, energy, and the environment. And this year, the award is given to Hendrik Malko, who's a junior economist at the Kiel Institute for the World Economy in Germany. Hendrik, congratulations on being given this award. The next set of awards is for the appointments of the new GTAP research fellows. These are individuals who are given a three-year term in recognition of significant contributions in the development of GTAP, either through contributing to the database and models and related tools, through development of CGE models and software, outstanding research using the database and or models, or contribution in advancing the use of GTAP, strengthening CGE analysis, broadening the GTAP network. We accept nominations from all network members who in the past 5 years have either contributed to the database or presented a paper at the annual conference. This year, the current research fellows are here. So for the individual periods, I'm not going to name each one of them, but you can see their names there. So the new research fellows, so this is for the 2022 to 2025 period, are awarded to Alessandro Antimiani, who is with DG Trade, European Commission in Brussels. He's been a very active user of the database and doing economic analysis. The second is awarded to Elaine Bartlings, who's with the Wageningen Economic Research. She works on the Magnet team. For those of you not familiar with the Magnet team, I do recommend you go to their website. They produce a voluminous amount of work, a lot of it using the GTAP model, and they've made many great advances with the model and The third award is to Wolfgang Britz. This is actually a renewal because Wolfgang is just finishing a term, a 3-year term. So Wolfgang has been renewed for an additional 3 years. Wolfgang also a prolific researcher in CG model, uses the GTAP database quite a bit, and has developed a CG box, which is intended to make it easier for non-specialists to be able to use CG model. The fourth awardee is James Jessica, who is director of the Center of Policy Studies at Victoria University. Of course, we work very closely with COPS both in model and modeling tools development. And James not only is director of COPS, but has also a very strong research background in CG modeling. And last, and certainly not least, Maros Ivanic, who many of you have known for a long time. He got his PhD at Purdue using the GTAP model. He's now with the Economic Research Service in the U.S. Department of Agriculture, and he's doing a large amount of GTAP database and GTAP model. So congratulations to all the new GTAP research fellows, and we welcome you into the community of research fellows. Every year, the board appoints a board member for the Allen and Allen. This is in recognition of outstanding contributions to the establishment and early development of GTAP. This is Allen. We're talking about the Center for Global Trade Analysis established the Allen A. Powell Award, which is presented each year to recognize the outstanding service of a representative currently serving on the GTAP. This year's awardee is Janine Pelican. Many of you know her. She's at the Tunin Institute of Market Analysis and has done a lot of work with the GTAP database and policy modeling, and is also the brains behind the TASTE modeling tool that many of us have been using for trade policy. So please extend your congratulations to Janine for this report. I often take this opportunity for the last comments of the conference to tell you a little bit about what's happening at the center. As many of you are aware, we met with the advisory board earlier this week, Monday and Tuesday. So this is basically many of the things we presented to the advisory board in terms of work that's ongoing at the center and our plans for the next 12 months. Most of you will be happy to hear that we're getting close to releasing version 11 of the database. The board has gotten the third pre-release just recently. So we'll have a new reference year, 2017, that is added to the existing 4 reference years. We, as Stephen mentioned, we have a lot of new input-output tables, many in sub-Saharan Africa, working closely with the UNECA. In total, we have 18 new countries in the database, so we'll have, I believe, 158 country regions in total, 19 of which will be composite. There have been many other improvements. We're using the FAO for agricultural targeting. We've improved our assessment of CO2 emissions to be more in line with the international databases. Will be integrated with energy subsidies, and the list goes on. You'll get the full list when the database is released. We're working on a number of extensions. So GTAP Bio, this is Farzad Tahiripour's work, essentially. We're trying to mainstream that into the build so that it would be available to the general public. There's a database on foreign direct investment and foreign affiliate sales that we're working together with the WTO on. We're working with the World Bank and the ILO on improving the labor database, and we'll have a version of it that identifies labor by educational attainment level and gender. Maxim, along with others, has been working on a nutritional database, which is critical, especially for looking at the Sustainable Development Goals. I think that I'm very excited about that work. And of course, once version 11 has been released, we will start working on version 12. We did have a discussion on the board about version 12. Normally, we would have, a step size of 3 or 4 years. Unfortunately, 3 years lands us in 2020, which is the COVID year, the worst of the COVID year. It would be not a very good year for a GTAP database. So the board has urged us, and we will certainly follow their recommendation. And we will, the next reference year is almost for sure going to be 2019, just a 2-year step size. We hope we can get that out a little bit quicker than usual. In terms of the modeling, we're working towards a new version of version 7 that will be more modularized, that will incorporate things like GTAP energy, GTAP power, GTAP AEZ, and we're going to be adding other elements to it, such as process emissions, damage functions, etc. And it will basically become a GTAP IAM, so an integrated assessment. We expect to have an early version of that ready before the end of the year. And so everything will be integrated into one code. And users will be able to select which parts of the modules they want to be active or not. We'll also we're working in both comparative static and recursive. The other thing I'm very excited about is we started work on GTAP SR sub-region, a sub-regional version of GTAP. There have been variety of efforts out there already. Many of you are aware of them. Right now, we're currently testing it with the WinDC database, which we've spoken about in the past. This is a GTAP-like database for the 50 states of the United States, and we currently have that running in this GTAP SR model. So keep your eyes out for that. We're doing a huge amount of research. I'm not going to go through the whole list here. I think we presented a lot of that already here in the last 3 days, but the center is very busy. One thing that maybe is taking us a little bit outside kind of the more traditional GTAP work is that we're working a lot with Tom Hurdle's new project called GlassNet, which is a cross-disciplinary research effort, and we're working with hydrologists, we're a model of biodiversity and ecosystem services, soil models, and climate change impacts, and the climate modeler. So it's a very much an integrated effort to combine several, kind of these biophysical models with the GTAP with the GTAP. In terms of the network, GTAP-U is taking shape nicely. Zeynep Akgul, who's our education minister, if you want, is finalizing now the modularization of the courses. That make it easier for us to teach courses. We're also we have the plans to develop new courses. Certainly, the GTAP IAM will be one of the first ones, I think, where we'll see a new course. We'll be holding a short course. Well, it's probably started already, but it will be held online later this summer. We hope to go back to in Purdue short course next summer. Please continue to read the Journal of Global Economic Analysis. We're now entering the 7th year. It is ranked pretty highly amongst economic journals, so we're very pleased with how that has been established, and please do submit your papers. Along with the journal, we now have a webinar series, so we just pull out one of the articles and have one of the authors or the author present that at a Gtac webinar. We advertise that broadly throughout the network. The network continues to grow. I think last time I gave a talk on the network, I think we were 22,000 members. Now it's 25,000 plus. So it's the membership continues to grow. We're very happy. I think this is the penultimate slide. Next year's conference will be in Bordeaux, France, hosted at the University of Bordeaux, 14th through 16th of June. So keep your eyes out open for that. I suspect abstracts will be called for sometime in the fall with a mid-January deadline. Last year's Fort Collins venue has been postponed till 2024. We already have the date for that. It will be in Fort Collins. The Kigali venue has been approved for 2025. We'll be working with Stephen and his team on the date, and we're certainly open for volunteers for 2026 and beyond. So let us know if you're interested in hosting. And so many thanks to all of you who have attended. I know it's been a busy and tiring week, at least it was for me. I saw many very interesting presentations, so many thanks for your participation. Goodbye, stay in touch, and we look forward to seeing you in Bordeaux, where we'll drink our glasses and have a very nice glass of wine together. Have a good rest of the day, and see you next year.